It's a crypto sniper with you. How are you guys doing? And many of you feeling a bit bored lately by crypto, particularly Bitcoin. Now seeing it slip, a little bit of head and shoulder structure potentially showing up. What's all the fuss? Why aren't you going up higher? What could happen? Are we still in a bull, or was it ever a bull? Has it just been a rally and a bear market? Lots of questions coming from the general crypto markets around their God markets. Let's take you to the charts straight away. So, Bitcoin, US dollar. Just to remind everybody, conceptually, where are you? This is our big macro draw. We've taken Bitstamp. It's a huge market that goes right back to almost the beginning of Bitcoin. And what's been happening, actually, there's been a bit of news as well. We'll touch on that as well. But let's just deal with a little bit of an opening salvo of technical. Your first cup gold nugget was the fact that you had a very small little pullback leg after this high, and it broke very early. You had 5 cups to guess from. There's only one gold nugget under it, and you actually guessed the first cup first time. It went early. That was our analogy for what was one of scenarios of many. And one of the reasons why you didn't get much of a third down leg was the nature of the second down leg, which was extreme, and it was brought on by external macro events, and people needed a liquidity absolutely desperately. And when they need liquidity, they sell the most liquid things. That's not a house, it's Bitcoin on an exchange, for example. So we got a super downward dip as part of the events of March 2020. And as a result, that was the harshest period of selling. It was even in some senses faster and meaner and harder than our big known bear call that made us very unpopular during the 2018 era. That saw Bitcoin fall from around 6.5 all the way down to 3.2s. So as we are going through those legacy historical events, we got our first cup gold nugget, and that was a beautiful exit on this head and shoulder. Yes, that's a left shoulder, that's a larger head, and that was a right shoulder in there with a 47.5 neckline that we'll be showing you in a bit. But as a result of that bull market that we got, and it was almost single-mindedly bullish, we went up, and up. Now you'll see there's blue lines as to where we are. And I want to highlight a few things. So we're going to say goodbye to our first cup gold nugget. We're going to get out of that space. We're going to bring it through a little bit, bring the time frame down a little bit. Here we go, and we're dropping in. And we're talking about more of the modern history. There it is. That was your first head and shoulder at the 64K high, with that being the eventual high. Since then, you've had a falling wedge is our call. That means downside largely. However, within that, you had the final high. That was the 69K high. The final high, a long bloated second. This was the horrible bear that seemed like it would never end. You had your secondary, your splitter, as we like to call it, on the falling wedge. That's a uniquely HVF concept where you get the interim bounces and wind-ups and the half pullbacks. You can see them here. You get a pause, big wick there. That was a big warning for us. All bull scenarios were long gone finished when that happened, and that bear was a clear selling bear. Then we crossed the splitter and we made it all the way to the other side, and we started to make upside progress. So you have broken out of, on the macro time frame, that is a weekly chart on Bitcoin, out of a falling wedge to the upside as one of a number of key patterns. Also, I rush to point out, and we not everybody sees every video we do, so there is occasionally some repetition that is required. But this macro head and shoulder, which was the 69 run that was created over there, gave you the perfect low with its targets in and around the 16,100 for what turned out to be a low of 15,600 odd. So that was an absolute performance from the ultimate high all the way down to its eventual low. There was also performances to the downside out of flags here and here that were all confluencing around these low levels, not shown, otherwise my charts just look like an absolute sketchbook, a smorgasbord of someone on crack cocaine has been let loose with the crayons. So I've kept it fairly simple so that you can follow a couple of key constructs. So now we're going to say goodbye to all these head and shoulders and the bear structures, and I want to just focus a little bit more on what's happened more recently for you in the crypto realm. So we're going to take it down to roughly, let's cut it in half. We get it down to around 3 days of the week, and we'll get the focus on what happened more recently. So I have boxes around where we targeted a potential low sell-off. This is from an upside head and shoulder at 69,000 all the way down to 16,000. This is in a beautiful symmetry, something so few people are commenting on. And only people who've watched our channels have sometimes on their own content spoken of this. But this is in of itself another structural pattern, exactly the opposite to the one that started the big bear with the peak high at the head of 69,000, now with the peak low at the 15.6, the target of the original downside. You're talking about book-ended move between two heads and shoulders, for which this one is the inverted structure. What are we talking about? The 25K here is now serving as the key neckline moment. And this was your left shoulder with your interaction at the 25K. You had the additional bad news of the FTX events. That was November. That gave you an extra sell-off that brought you home to target over here. And then we started our move up with the interaction on the 25K there and the right shoulder sell-off event. So you have now created a reversal, an inverted head and shoulder for the upside. So what now, you say, because things are getting a little bit edgy, people are getting nervous, it's looking a little bit like it's an off to the downside, it's rolling over. We highlighted a head and shoulder on the total market cap, which was pretty good quality. There is scope for downside. Yes, there is, my friends. Yes, there is. You're not going to get a straight line journey ever in trading, although I would say the first cup gold nugget was pretty consistent on the upside. Even still, it took a rest at key levels. So now what we're going to do is we're going to drill down into the more recent history that we're looking at in terms of Bitcoin's performance so far against the dollar. So that was your neckline break. That was the very minor below 20K key level of significance run of the right shoulder. Remember, this is your right shoulder to the downside that once again came at 25K. Now you came with such momentum from the 19,500s odd. What was the absolute lows? 19,569. And you came up with such momentum. You paused at your 25. Note that selling wick right the way down, almost a shooting star. In fact, it virtually is. It's not the smallest body. Typically you look for a smaller body in a single candle, but if I highlight that one particular candle, it's virtually a shooting star. Let me take the eyeball off so that you can spot it a little more easily. Normally you get a rest to the downside after that. Such was the degree of bullishness. You just got a small red candle and you continued up. So you haven't really had a meaningful rest since the rejection of the 19.5 lows. By the way, a revisit of the 2017 high all the way back when. Beautiful symmetry, lots of key levels of significance. This is how we do probability-based future scenario casting, utilizing very tight risk with expansive rewards. And we suggested that you would do a technical run of the 20K prior to that actually happening, and it would be a bullish buy event for a subsequent neckline break, all of which has occurred. But hold on. Now what do we have? We have the slightly more ropey behavior where you might indeed have this. Now it's not as perfect as it is on total. We'll be showing you total in a minute. You had a very clear-cut grinding line there that was broken. Let's do that rather in a straight line draw, so it's a little bit tidier, and that was clearly illustrating a bit of fatigue. A bit of fatigue is coming about. So it all was banking failure. Bitcoin got bidded on that. There were no more exchanges really to fail, no more meaningful ones. I understand Bittrex handed in, gave up the game. But in comparison to what was going with First Republic, it's still potentially happening with Westpac, and of course Silicon Bank and all the others that you know, crypto was looking almost the safe space, and money needed to flee the financial sector in the traditional markets more than there was concern in the crypto markets. So as a result, we were held up quite strong, but we didn't make any great new progress. And structurally, you would say there's a little bit of a level that has come about round about here. And if we go back to drawing this on where we have all our levels drawn in, there's an argument that you may have had head and shoulders in and around the 27,500. Once again, better on the total, which implies more problems potentially for the alternative market, with a few exceptions that we will be touching on that will even potentially do better than Bitcoin. Why has some of this focus been on Bitcoin? Well, interestingly enough, and you'll get news and hype and stories from others far more. We tend not to be overly narrative driven. But if you look at some of the things that have been going on with Bitcoin, you've noticed that in actual fact, there's a block in transactions being covered. So if we have a look at this chap's Matty Greenspan's responses here, it's official. Ordinals are breaking Bitcoin. So ordinals are the NFTs for the Bitcoin chain. You're seeing unconfirmed transactions. The count was just climbing and climbing and climbing. Backlogs, backlogs, and backlogs. Maybe the bigger block guys were not so crazy. Bitcoin transaction fees now pushing towards $20. This is very much like an Ethereum gas story, not so good. And here you can see their effect on the charts. So now you've got something that's a little bit Bitcoin specific, which is the God market of the crypto realm. And you've seen it as well on the Bitcoin dominance. So dominance has also eased slightly. Now, forget calling end of time on the dominance. So let's just take a look at the dominance. We can come back to this chart because I think you will get a small coming off out of Bitcoin, possibly a falling wedge like you're seeing over here, for example, for a wee bit. But generally, we are of the view that you're probably broken out of this lengthy stall box. Quick reminder for everybody where this comes from. You have made many, many interactions just sub the 40 mark and many interactions across the top of the 47.5, 48% mark. And we feel that you've probably broken out and will continue to make moderate progress to the upside. But as you are facing a challenge that is very specific to the Bitcoin chain, you may find that you're getting pullbacks, typical of a breakout, break out to the top side, revisit the legacy line that you've broken, hopefully now as support to the upside. But Bitcoin Max is not feeling maybe as cocky or as confident right now in lieu of the performance aspects of that. Good. So we've covered that. Let's just also go back and grab the total that I mentioned. So total is market caps of everything. And I'm going to take it down a time frame so that we can show you this more clearly and specifically, and we run it through. So this is in and around the 4-hour period, and we were highlighting yesterday on our Twitter feed that this is not good structure generally for the overall market cap, and the overall market cap could revisit the 1 trillion mark, which is this thicker blue line that it broke. And isn't it fascinating that the 1 trillion mark is not too far off where the 25k mark was for Bitcoin? I think it's around 1.08 a little bit, and it will adjust of course as various alts are changing, but it was quite a breakout event above the 1 trillion mark. And now you have a 1.15 trillion neckline for total market cap that is quite a clear cut head and shoulder, and is suggesting a possible target down sub 1 trillion. Now that could see, if that were to happen, crypto across the board getting knocked back down. Not every head and shoulder that forms necessarily performs to target. I'm just highlighting a potential threat. We were discussing this in our trading community around crypto. There were no net longs, no leverage trades to the long side being put on. I don't over encourage shorting into what we believe is a macro bull on any trading level. Keep your leverage trading in the direction of the macro and get on with it. don't lose to the downside. Stand back. Give your nervous system a break. You don't have to be in all things, all markets. Trading counter the macro, long run doesn't work out well for your P&L statement. But I would still suspect you could come at least part of the way. Remember, it doesn't have to perform to target. It can come part of the way down. It can bounce on the 1 trillion. It can bounce on this funnel level. There's a lot of things that could transpire on the total market cap. So if the overall fundamental narrative that might be causing some problems is the Bitcoin blockchain, how has the other alts, are there any alts that are doing a little bit better than Bitcoin? Because the dominance has been giving up some of its dominance. And for that, we turn to a couple of obvious ones, such as Ethereum. So when we have a look at ETH, you can see it's also sold off. Let's take a different chart, maybe a little bit less cluttered. It is also looking soft and is also selling off. But does it have the exact same structure as the total market cap? Not really. Is it pulling back as badly, potentially, as Bitcoin? Well, if we have a look at Ethereum Bitcoin, and I'm going to take you back up the time frames here, we have been saying that at some point in the not too distant future, we will start to see some Ethereum overperformance. I know about their gas prices too. They've also had spells of being really expensive, etc. But we've highlighted before that this structure is very much a falling wedge, a very big bloated half pullbacks along our splitter that I'll put in override draw for you over there. You can see the multiple half pulls until eventually you base out on a low. And we're actually into our third infraction and loop, which is likely to see a break of this red line to the upside at some point. So overall, the suspicion is we're at the third level where there's going to be a period where Ethereum is going to start overperforming Bitcoin. And at this very moment, you're at roughly 6.6. Oh, it's very dangerously close to 3 sixes. 6.6539 at the moment. That's as a percent, I would say 0.0665 to a Bitcoin as a percentage. And overall, I would say it's calm and it's going low volatility. That is an excellent precursor to a future period of overperformance from Ethereum. So that moment comes. However, it's important that you don't rush getting in and get in too soon. There's a slight risk. There's slight risk still. It doesn't mean it's impossible for you to get another final stab down. Don't forget this basing descending line that's running across here. You could get a break both of this level for a small stab down, and you could even go all the way there before later going up. So be on alert, but don't be too early. Generally, I don't feel we're going to do this. I think we're going to go really calm and sleepy for a while, and generally a little bit of Ethereum bias to the upside, a little bit off, and then we may have the beginning of a move forward. We are still expecting on our fat cokey draw, let's go with a blue this time and fatten it up. We're still expecting, there's your first impulse, there's a second impulse, and here comes, I would still expect a third, an up and over of some variety. So whilst you might go up, you don't need to chase on up, because you could still have a final pullback. So we've had one very distinct period of pullback over there. We are in the second cycle, although near the end of it, in this falling wedge. So this is your other pullback period that you are currently in, and there will be a breakout and then an easing to some degree. It may not ease a lot. It might be at a very flat angle like that. It could be a touch steeper. It could have a little capitulation moment if there's some news, FUD. But longer run, we are overall anticipating and setting ourselves up for a pivot to bias on Ethereum at some future point. So if that happens and you base out, we go up and over, and then this is when it gets interesting. And overall, you're looking at, let's call it 3 sixes for a devil's number. You're looking at an environment where the relative value of Ethereum to Bitcoin is likely to at least double. That's a big piece of news, because it probably points to continuation of bull dynamics for the crypto market, which is further enhancement of our inherent bull bias and the inverted head and shoulder to the upside that we've already just described to you. And it then points to this event coming that could see Ethereum double Bitcoin's overperformance. Now, as you know, we've said we could see Bitcoin crossing the 40K mark and potentially getting to 42.5. That's given a high approximately of, I think, 29, maybe it traded 30. I'm not entirely sure. We'll have to check that. But if it gets to 42.5 from a pullback point, let's say it goes some of the way down to 25 direction, but maybe it doesn't go that far. Maybe it does a 24.5, whatever the case may be, somewhere in there, and it turns and then runs to 40,000, you're talking about a 75% move, another 15,000. A 3 out of 5, it's a 60% move, call me a liar. And if it goes technically to 42.5, you're getting on for about 70 plus percent. So in that environment, you could have a double the official move out of Ethereum. And by the way, that doesn't mean triple and quadruple on every other smaller cap alt, although in some instances it could indeed be possible. But we will trade technically, and we will let the move make the money, and we are going to wait for this one to come to us. So an Ethereum bias in time, but first maybe Bitcoin pulls back a little bit on that dominance, pulls back a little bit on the USD, but then reasserts slowly on the dominance before eventually Ethereum starts overperforming. When Ethereum starts overperforming, we should see the ETH-DOM chart indicating that. How does that look? Well, let's go straight to it then. Again, when you are more broad about the Ethereum dominance, you can see that we also have a little bit of a structure here, which would point from around 19% to around 23.3%. So it already has a very interesting little squeezy that is probably already in breakout in our view, and has a little pullback event and is a bit slow but getting ready to go, but we can see the possibility for further upside. However, if this were to break to the downside and we get an extended third impulse on the ETH BTC a little bit longer, it's quite possible this could break lower. And I wouldn't say that's the worst thing to happen in the world. It just means that moment where Ethereum starts overperforming Bitcoin could get pushed out, but the degree then by the subsequent move could be bigger still. So were we to get an ETH dominance failure on the smaller structure, you would end up in a far more proportionate, bigger structure that'll probably bring home the game. So that's how the crypto markets are looking right now for us, with Ethereum potentially being set to over-dominant. It'll either come soon. If your Ethereum dominance runs through this level, the 19.04 level that you are seeing here, that is this line over there, then you're going to be a longer time coming, but potentially even larger when you arrive. So big profits a lot later, or a reasonable move a little sooner. Who knows? I don't know which one is better for us. I'll take what the market is giving to us. Right now, don't do too much. Don't do too much trading, particularly. It's going to do damage to your wealth overall, because you have this awkward period where you're potentially in a macro bull, but you're in a pullback phase. All the lights that normally go green on for the Formula One start of the race are not all green. You've got some still red. It's best to wait till they're all aligned and you can trade to the long side. But what if we're wrong on the macro, you say? What if we're wrong on the macro? Here is our point of failure for being wrong on the macro. And it's quite simple and it's unequivocal. The point of failure for being wrong on the macro is absolutely here on the low of the shoulder. Let me just take that off. Right there, and it's quite clear. So you have some way to fall before that potentially occurs. In fact, we've been due a pullback on Bitcoin for a while. It's been in a bit of a grindy piece of price behavior for a fair amount of time. It's been going up slower. Remember, we've warned of the upside rising wedge that has been squeezing ever higher. And the sooner you have a reasonable pullback, the sooner you get to freshen up. We suggested it could already be in a break through here, and that this is part of that move, and that could lead in a technical run of the 25 before making its way back up and getting ready to go again. Okay, don't forget, for regular updates on how we're seeing the market and how we are trading the crypto markets and which alts and when we think they will overperform, and making sure that you are building wealth in reset season, click the first link in the description below to book a call. Many like you have gone before you. In fact, the people you'll speak to once did the exact same thing themselves, are part of our community trading HVF method for building wealth in reset times in both the crypto markets and also the financial markets. A final little point for all of you just outside of the crypto realm, and that is a warning that the dollar downside, despite many people's opinions, may actually for a while be partially over. And we could in fact get a degree of a bid in the dollar market. On gold, for example, also been grinding its way quite a lot recently, close to technical highs. Why should you care about the gold market, you say? You're just a crypto bug. Well, the anti-fiat category as a whole is this is one of your sister horses in that stable, and you can absolutely see the upside selling wicks, the lack of ability to hold localized highs as we have been approaching key levels in and around the 2050 level, which have been resistance before. Typically the third time you pull back, but not as far, and you break it on the fourth. So it's 3 resisted, pull back and go. And this time I don't expect the pullback to be near as far. Broadening structures like this show some degree of exhaustion, some degree of people rushing in to buy the dips, and typically the dumber money chasing in near the technical break could see a small correction. However, I do not anticipate a pullback of that scale, and I think gold will be into new highs in a reasonable time, but probably after a technical pullback. This mirrors my opinion on Bitcoin and the quality crypto alt markets segment. So bear that in mind as the dollar has a little bit of strength, and this is illustrated by the dollar index, which of course is measured very strongly against the euro, the Swiss franc and the pound to varying degrees. Here you can see it, a little bit of a bid after a period of real low volatility. If you want to know why we do not consider this a plausible head and shoulder for the dollar index for a further down break. Everybody is screaming de-dollarization, de-dollarization, end of the dollar. And this is a head and shoulder and big down. You can learn why with our complex head and shoulders and with our regular updates, why we do not consider this a likely head and shoulder that is going to break to the downside, and all the reasons why technically in our premium area with our recorded content and with those regular updates by myself as to emphasizing the reasons why we don't see this. And in fact, this lower volatility and hangout period is probably likely to see at least a small rally out of the dollar coming, if not an entire turning. Okay, that could mean for now a little bit of a countervailing or a headwind for both gold and silver, and also for crypto. Okay, till I catch you next time, be patient, be investment long on the macro, putting new money in, hold back. You may get an opportunity to put it in at a slightly lower price, or dollar cost average in generally. Until I catch up with you later, don't forget to hit a like and a share. We truly appreciate that. The links for buying both pure gold and silver are below, as well as utilizing our Scandinavian capital markets for trading the crypto markets, the FX markets, and the traditional markets, as well as the simple FX link are also below. Thank you very much for supporting the channel, and we look forward to updating you again soon. Till next time, goodbye.